This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Tuesday, April 22nd, 2008. Well, the dollar reached yet another new record low today as oil rallied to an astonishing $120 a barrel. This finally propelled the euro-dollar above 160, albeit only for a brief moment. This pair was above the huge psychological resistance for a second or two before sellers sent the pair back toward 159.70. We have since seen several more failed attempts with a high in place at 160.20. Looks like we may close the day right near 160, leaving the pair open to further gains in coming sessions. Outside the euro, most of the other major currencies gained against the greenback as well, all to a different extent. The lowest yielding currencies, yen and franc, were limited in their gains as risk appetite in general remains relatively high. This lures Forex investors into higher yielding currencies such as the Australian and New Zealand dollars. The pound sterling was the biggest gainer of the day, rallying nearly 200 points to test the $2 level intraday. This surprising run came on the back of a big sell-off yesterday on news the Bank of England would accept mortgage-backed securities for loan collateral. The market cannot seem to make up its mind about what is good news and what is bad news. Of course, when it comes to the U.S. economy, it all seems to be bad news. Today's existing home sales showed the annual pace drop below 5 million units last month, the worst in almost a decade. We also saw home prices drop sharply in year-over-year figures as inventories climbed to more than a 9-month supply. This did not help the struggling dollar as bears have no shortage of reasons to sell the currency. Finally, Dallas Fed President Richard Fisher put the icing on the cake today when he said economic growth may be anemic for more than 6 months. He added that inflation is also on the rise. This means the economy is in rough shape and the Fed may soon find itself between a rock and a hard place. The FOMC decides on interest rates 1 week from today. In the meantime, there's very little holding traders back from unleashing on the greenback, especially if commodity prices continue to surge. Till tomorrow, have a wonderful night trading. Take care.